Hi everyone, Tim Smith of the Tim Smith Real Estate Group, Coldwell Banker Realty's #1 team in Orange County. For our November Orange County real estate market update, let's break down the top 3 trends driving the house market as we approach the end of 2024. But before we jump in, let's talk about where we are in this very defining moment in 2024. We are on the eve of what may be the most chaotic election of our lifetime. Generally, they're dramatic, but this is just an outright chaotic, polarizing election. By the time you're watching this, we will be on the eve of the election. Keeping my politics out and sticking to the data, regardless of who wins, even though I have my preference, the best way to predict the future is to look at the past. In 9 of the last 10 elections, as it relates to coastal Orange County real estate, we have seen within 12 months of those elections, regardless of which party won, an acceleration in appreciation between 6 and 27%. And in 8 of those elections, there was a double-digit percentage increase in demand. If we can get to see further interest rate relief combined with our current anemic inventory levels, I'm predicting a tide change in the real estate market. So sellers get ready and buyers don't wait. If you're a buyer or seller, you know that mortgage rates are the name of the game. Earlier this year, they were sky high, stuck at 7% or more. Buyers couldn't afford as much, and the sellers weren't too keen on trading their low fixed rates for something much higher. The result? Demand was slow and listings weren't exactly flying off the shelves. Then in mid-September, rates dropped below 6.5% and held steady for about 6 weeks, reaching the lowest we've seen in a year and a half at 6.11%. This was enough to spark some activity. Buyer demand shot up 13%, and we saw the expected market time, or how long it takes to sell all active listings, drop from 78 days to 69 days. Buyers were back, at least for a bit. But October brought another shift, pushing rates back up to 7%. If rates dip below 6.5% and stick, we could see another surge in demand. Until then, things are likely to stay a bit quieter as buyers wait and watch. And usually inventory peaks in July or August as people try to buy and sell before the school year. But this year, thanks to subdued demand from the high rates, inventory didn't peak until October. Now, as we move closer to the holiday season, we'll see fewer new listings and likely some sellers taking a break from the market. This means that as we enter 2025, we'll likely see inventory dip to where it was last January. Buyers in early 2025 may find themselves with fewer options. However, don't forget that they'll also benefit from less competition. Here's the good news. For buyers, it's turning into more of a favorable market for you. Back in March, homes were flying off the market in just over a month, with multiple offers and bidding wars. Today, with inventory up and demand a bit softer, homes are sitting for an average of 69 days, which means buyers have a bit more time to breathe and negotiate to get the home they want. Sellers have started to adjust too. About 35% of the active listings have seen price cuts, and more sellers are opting to pull their homes from the market if they don't see traction. For buyers, this means you might find sellers who are more open to negotiate. For sellers, it's a reminder that in today's market, pricing strategically and realistically is key. Keep in mind, even though we've seen price reductions, you can't show me data that supports pricing has gone down. Listing pricing has come down. What's the bottom line? The Orange County market is going to keep an eye on mortgage rates. If they dip below 6.5% and stay there, we will undoubtedly see a pickup again. But for now, we're in a market that's giving buyers more room to negotiate, which is something we haven't seen in a long time. Sellers' homes are still appreciating and selling, but it's all about playing it smart with your pricing and timing. Now let's take a look at the latest data for single-family residences across our coastal cities. Newport Beach, 131 active and coming soon single-family homes. 31 sales in October with an average sales price of $4.65 million and an average price per square foot of $1,903. Average of 60 days on the market. Newport Coast, 37 active and coming soon single-family homes. 5 sales in October with an average sales price of $7.53 million and an average price per square foot of $1,689. Average of 28 days on market. Corona Del Mar, 65 active and coming soon single-family homes. 5 sales in October with an average sales price of $4.37 million, an average price per square foot of $1,660, and 72 average days on market. Laguna Beach, 144 active and coming soon single-family homes, 18 sales in October with an average sales price of $5.02 million and an average price per square foot of $1,875, average of 71 days on the market. Dana Point, 85 active and coming soon single-family residences, 17 sales in October with an average sales price of $3.69 million, average price per square foot of $1,306, average of 54 days on market. And the luxury market? In the month of October, we saw a total of 7 new sales in the 10 to 15 million range and 1 sale over 20 million. Autumn has proven to be a strong season for the luxury markets, with nearly 33% of this year's 10 million and above sales occurring in September and October. The year-to-date price per square foot averages are $2,486 for the 10 to 15 million range, $2,780 per foot for the 15 to 20 range, and $3,716 a foot for the 20 million and above range. The 10 to 15 million range constitutes 66% of our luxury sales, which we are calling anything above 10 million. The 15 to 20 million range constitutes 20% of our sales, and the 20 million and above constitutes 14%. For luxury active inventory in Orange County, there are 48 active listings priced between 10 and 15 million, 33 active listings priced between 15 and 20 million, and 38 active listings priced 20 million and above. What I've noticed in the luxury market this year due to pre-election jitters, high interest rates environment, and economic uncertainty is the discretionary second home buyer has been holding their breath, literally frozen. I've already seen that tide change over the past couple of months. Regardless of which party wins, buying real estate is going to be back to normal levels by Valentine's Day next year. All right, that's everything for this month's Orange County Real Estate Market Update. Thank you so much for tuning in. As always, if you're thinking about buying or selling, I would love to be your trusted guide. Or if you just want to know your home's true value, it would be my pleasure to prepare a custom home valuation report for you. I generate these weekly for my clients. Just contact me with the links below and I can create one for you too.